I've kind of been developing this material and keeping it in my back pocket, and waiting. And look, we can never know. We can never know when the bear market is going to come. But there are some signs which we'll talk about in a little bit that lead me to think that now is the right time to start looking at some of this stuff, and we'll get into that in a little bit, right? But broadly, right, the lessons here, we can pull them out for any bear market. There are a few things that are very specific to the situation we're at right now, which may help us to pinpoint the start of something turning with a little more confidence. And we'll talk about that also, but it's a little bit early to conclude that we can rely on those, but we can talk about it. Len's saying, yeah, some folks have been waiting for the bear for 8 years. Some folks, Len, have been saying we're in a bear market for all of those 8 years, right? I mean, every week they say it's here now, and we go higher, and they say it's here now. So, and I've been biding my time, and those of you who've been trading alongside me know that I've been leaning bullish for a while, and I still am cautiously. But we'll talk about that also. So I also had another working title for the class. I had really kind of wanted to call it Be a Bear Workshop, but I think that's I don't know, maybe a little too precious. But in any case, let's go ahead and dig in, right? And just think about what stuff was looking like just in January and February, right? So I mean, we had this day on February 5th when the S&P 500 lost 113 points in one day. So you know, that's pretty that's a pretty significant drop within one day. I mean, if you look at it, I mean, that's let me just get a little drawing tool here and point it out to you. I mean, that's this move down right in here, right? I mean, how much? I mean, that's nearly a month of small little up day bars erased in this one bar to the downside. That is, I mean, nearly a month erased in one day. That's huge, but that's not unusual for how bear markets come together, right? We see that in a lot of them. Now we can also see some pretty wild up moves. I mean, some of the biggest up days occur as bear market rallies, and so we have to be prepared for that as well. And so part of what we want to do in tonight is just remind ourselves, right, what bear markets are like, so that we can think through how we want to trade them. All right, so yeah, a move that big to the downside is not unusual. And look, maybe, you know, maybe this all-time high in January is the start of the decline. I don't think so, and we'll talk about why in a minute. But if it is, then we probably have more days like this. If it hasn't started yet, my preferred view, then when it does, this is probably just a preview of what we'll see a lot of at some point, right? At some point. So so as I said, I don't think we're in a downtrend yet. I think a lot of well, and I think we covered a lot of this stuff, right? So so just a preview of what we might see. And you know, the other thing just to remember about that, right, is how back and forth we were kind of up in here, and even when we started to the downside here. And the reason to remember that, as we talk about sort of more of the things that happen in here, is that, you know, as traders, we get conditioned to say, gosh, when it's, a little up, a little back, a little up, a little back, a little up, a little back, we get conditioned to do quick hit trades, right? We get conditioned to say, gosh, even if I'm trading the downside in here or here or here or here, that I'm going to take what I've got quickly and get out. And then when this thing really does get going, if we were conditioned to do that, then then when this thing really gets going, we don't let our trades ride to get the big profit. So so all of those are things that we've got to keep in mind when we think about how we want to trade bear markets. And as I said, now I think is the time to start preparing. The S&P 500 has been in an uptrend for more than 9 years. And even though a lot of the technical signals that I usually expect to see, want to see near a top are not showing yet, the next push up could start to show them. And so even without those technical indications, there are some signs that the bull market is getting late in its cycle and could be nearing an end. And those are the things that are wanting me to come in and share with you, right? How to look at that, and then when we get a chance to do more of a deep dive, talk about what some of those technical signals are. So the warning signals that that we're going to look at are related to Elliott Wave, which is the primary lens that I use to look at the market. Right now, I know, since I know there are folks here who follow a lot of my work, so I know there's some folks here who follow Elliott Wave also. I know there are probably a bunch of folks here who have heard about Elliott Wave and heard that it's, gosh, way too hard, heard that it only works in hindsight, heard that it's ambiguous, that it's really too subjective, all sorts of things, right? Or maybe even you've tried to use it and gotten frustrated because you've heard folks say that, hey, the top is in, because as I said, some people, even some Elliott Wave folks, have been saying the top is in for weeks and weeks, and or I mean years and years, right? And and you may have gotten hurt, right, trying to be short. And so I've got a little bit of a different take on Elliott Wave. Dr. Bruce is here asking, is any of that wrong? No, we'll talk about that in a little bit. No, it's not, right? It's not. So a lot of those knocks on Elliott Wave, we'll talk about them more in a little bit. I don't think they're wrong, but we'll talk about why that's not an issue in a little bit. But what I want to talk about first, before we dig into that, right, is that the reason we want to pay attention to this. I mean, I'm a trend trader, as are a lot of the folks here, right? At Simpler Trading. Some folks here are trading, momentum breakout kind of stuff, but a lot of us are trend traders. And the basic model that we look at for trend trading, right, is right here. Right, what we want to do: identify the end of a prior trend, and then start to confirm a trend in a new direction, wait for a counter trend move against that new direction, and then when the counter trend retracement exhausts, enter a trade in the direction of that new dominant trend. For me, the best set of tools that I have to do all of those things are looking at the Elliott Wave patterns. Now, look, there are other great trend trading tools. Right? You can use Raghee's tools, great set of tools to participate in the meat of the trend. Some of the things that I want to do with Elliott Wave, right, are try and identify when, right, we're near turning points, right, when we're early in a trend, in the middle, meaty part of the trend, and when we're towards the end and things might be running out of gas, right? So so those are the things that we're going to look at, trying to use, again, to identify when we might have a turning point in a little bit. And as Dr. Bruce asked a minute ago, when he asked if any of the things that we talked about as far as knocks on Elliott Wave are wrong, right? I mean, what are some of them? It's complex and difficult to learn. Yep. That it's backwards looking, right? That is, we only know if the Elliott Wave pattern we suspect might be going on is right after the fact. That is also true. That means there is some ambiguity, right, when we're looking at things in real time. We don't know for sure what the pattern is, but the observations of Elliott Wave, the rules that must be followed, are consistent after the fact. And this will make more sense when we look at an actual example, but if we know that even that after the fact, certain rules are going to be followed, even if we don't know how they're going to unfold while things are going on, we can draw some conclusions in real time. Not be sure what's going to happen, but draw some conclusions. And any conclusions that we can draw about the market are going to help us in terms of shifting our probabilities of being trending in one direction or another. And we know we can never be right all the time in trading. So anything that we can do to shift the probabilities in our direction is going to help us to make better trades. Right? I mean, I know, I know some folks who do some quantitative finance on Wall Street, and they're sitting there and they're saying, look, if I can do anything which statistically, describes 3 or 4% of the move, not 100%, 3 or 4%, I've got an edge that I can trade on, right? We don't need to know what's going on all the time. I mean, I'd like to, but if we can't, we can't. So what we really want to do is shift things in our direction. And so again, the way I do Elliott Wave is a little bit different. I don't want to come in here thinking I know what's going on ahead of time. What I want to rely on is the observation that R.N. Elliott made, right, nearly 100 years ago, not quite, but nearly, that moves in the direction of trend. We're in an uptrend now. Unfold as 5-wave moves. That is, right, we can come in here after the fact and say 1, 2, 3, 4, 5. Is this the right way to interpret it? I don't know. And so, and we're not able to know until after the fact. And so if we acknowledge that as a real and legitimate concern about using this tool, then we're not going to get caught up in thinking, okay, the market's got to turn down now. And if it doesn't, we're going to get hurt, right? What we can start to say is that if this is the case, then we're not going to expect, when we're partway along, once we've seen 1, 2, and 3 is in the middle of development in here, we're not going to say, oh, this is done now, right? Because we haven't seen any evidence that this move is plausibly complete. We haven't seen a 4 and a 5 up yet. And so it would be unusual to see this starting to turn down from here, even though this was a new all-time high back here, right, in 2013. So we can draw a reasonable conclusion expecting this to continue up. Yeah, we could get good sized pullbacks like this and like this at any time, right? But we're not going to think that the broader uptrend is over. Now, as I said, we cannot know the structure of this move until after the fact. So I don't know for sure that what I've labeled on here as wave 4 really is wave 4, or that this leg up in here is wave 5. I can feel, I can feel pretty good about the idea that if we break below the wave 4 low, that we can call this advance over, right? So back below here, usually when you break the fourth wave of a trend wave move, you can draw a pretty good conclusion that that trend move, at least for the time being, is over. Now that's a long way away. We don't want to wait until until we get back below here to think we're in a larger decline. So we want to try and figure this out sooner. And one of the ways that we do that is by looking at the subwaves within here, because these wave patterns unfold in all time frames, and therefore, since this move up is part of the uptrend, and this move up is part of the uptrend, and so is this one, we can expect that each of those moves will have 5 waves within them. Yeah, so this folks is a weekly chart, but the main thing is we're trying to focus on this move up from 2009, and so we will want to look at, as Chet just asked, the subwaves within here, and we will in a minute, right? But just before we do, recognizing, right, trend moves to the upside occur, even if it's after the fact, as 5 wave moves. And the fact that even though we can't always be sure how they unfold in real time, the fact that we can always come back after the fact and see a reasonable way to attach a 5 wave move to the trend moves and a 3 wave interpretation that is like this, right? Down, up, down, as to see the counter trend moves unfold that way, we can use those observations to at least give us some clues to figure out where we are now. So if we now drill into the pieces within this uptrend, let me just clean off these drawings, right? I mean, we can see how, even if it was after the fact, right, this leg up here had within it, right? If we just look at these circled numbers here, 1, 2, 3, 4, 5 waves to the upside. And same with this Roman numeral 3, right? It had 1, 2, 3, 4, 5 waves to the upside. And we can go back and drill down and do this at smaller and smaller degree for all of these moves. We can find 5 waves up within here and within here and within here, and even within some of these moves within the 5th wave up. And so if this is our 5th wave up, then we can say that there's a reasonable interpretation that says that this move up from 2009 is late in development, or could be, that there's a decent chance, right, or a reasonable interpretation that once this leg is done, that the entire advance from 2009 could be done. And if that's the case, then right, we want to look and drill in and say, when is this move going to be late in development? Now, I think it's probably later in development. Maybe it's done, but I don't see any clear signs. Right, so we can drill in from our weekly chart into into a daily chart and look at this in a little more detail. Right, and what we can see is that, you know, after a first, right, strong move up and really one of the largest pullbacks in the advance prior to the decline from January, this is very reasonably a 1 and a 2. And from there are really, right, no pullbacks which are either suitable, this is unsuitable as a fourth wave, or really big enough to reasonably see them as a fourth wave. And so it's hard to conclude anywhere in this portion of the advance that this portion of the move from February of 16 is late in development, that it's in the last stage. And so even though it may at this point be extended, we may be in a fourth wave with just a fifth wave up to go. I don't see any strong sign that this move is done. Now, with that being said, right, if this is a fourth wave that we're in now, then after a fifth wave up, we very well could be late in development in this move, subject to a reversal. And if this move is over, that could cascade to the entire move from 2009 being over. So that's one of the reasons why we want to start looking at this. Furthermore, you can see how we've got a lot of congestion in here, just up, down, seeming like perhaps it's converging. And that, when we see that kind of convergence, to me, is suggestive of an Elliott wave triangle pattern. And again, for folks who don't have much experience with Elliott wave, one of the things that one of the reasons why we care about seeing these triangle patterns is triangle patterns are always the next to last move in a sequence. And what that means is, right, if a 5-wave sequence is a trend move, the next to the last move is going to be the fourth, right, fourth wave. So that means that the move after it is going to be the fifth. Triangles can only occur within a trend move as the fourth wave. And so if indeed this follows the script of being a triangle, then the push out of that triangle we can interpret as likely the last of this advance and look for at least some sort of corrective pullback before turning up. But if we're right about the move from 2009 being late in development, then potentially much more to the downside. So a real strong warning would be if, after continuing to consolidate in here and being reasonably able to view this as a wedge, that we pop up above to a new all-time high, and then come back below the triangle congestion. If we were to see that, I think that would be a very strong signal that we were likely starting a decline. And it's both the fact that this advance from February of 16 appears to be late in development, right? That we haven't seen or hadn't seen something that was plausible for a fourth wave prior to the January high. And now we see a move down, which to my eyes looks like it has all the hallmarks of an Elliott wave corrective move, right? Seeing that, and then causes me to think that, yeah, even without this being a triangle, one more move up and then failing would suggest reversal. But the triangle, if that's how it comes together, adds even more weight to that observation, and it may help us in identifying a turning point more precisely, looking for this push up out of a triangle to end and not waiting for it to come back below here. Now, we're not going to be able to talk about all the things to try and identify that this evening. We're not going to have enough time to look through that, right? But again, if it does come together that way, even without much more to look at, right? One thing that you can take away from tonight is if this pops to a new high out of this wedge, right? If it remains looking like a wedge when we pop up there, come back below here, that is a strong sign of a reversal, right? And so that's the sort of thing we want to look at. And these are ways where even if we can't be sure now how things are unfolding, we can draw some conclusions from this, right? That might help us out, right? That might lead us to favoring one thing versus another. And those are some of the ways that we can combat, right, some of those challenges with Elliott wave, but we don't want to get locked in to any one interpretation too soon. Now, I know not everyone is going to want to dig in and learn how to do all of this Elliott wave analysis on their own. And as we talked about before, it is difficult. It is complicated. It takes some time, mostly because even once you go and learn all of it, it requires practice and repetition to get good at it. And you know, we could get signs of this reversal relatively soon. And so that getting all of that ready ahead of time can you know, but before we see a reversal, that can that's probably impractical if we get a reversal soon. But we can talk through some ways that even without becoming an Elliott wave expert, getting to the point where you can do all of this analysis on your own, that you can make use of some of the lessons from Elliott wave in terms of thinking through and planning for finding a reversal in the markets when they come. Whether that's out of a triangle or some other pattern, because again, we want to allow for just about anything to happen until we see it. And so what I would advocate doing, right, is getting enough knowledge of Elliott wave and the basic patterns, because we haven't looked at all of them, right? We talked about how the triangle implies this, and there are other patterns that you're gonna at least want to be aware of, right, to follow along and see when there's an opportunity to trade, right? And even if right? They're an analyst might be wrong, right? And you might follow, you know, someone who, you know, one of the folks who's been, you know, bearish again and again and again. We can talk through how to follow their analysis and find spots that are safer to trade, right? And talk through, if we know the patterns and some basic checklists for getting into trades, how you can follow along. Now, look, I'm partial to my own analysis, and I would be thrilled if you guys eventually learned to do the analysis on your own. I personally, I found those to be the tools that really helped me get where I was going. But you don't need it to start. But you do need to know the basics in order to follow along. And then there are, as I said, we can build some checklists of how you can follow along, and whether it's that triangle or not, right? I mean, we already talked through how you can identify signs of reversal if it's the triangle. If it's something else, right, then at least you'll have the tools to follow along. And then we can talk through also how we can use observations from Elliott Wave to start to confirm the downtrend, start to assess how far it might travel, and figure out good, safe spots to try and join and enter the downtrend. And look, it's finding the right spots is critical, right? I mean, if we just drill into more that that February 5th move, I mean, this was, you know, this was crazy, right? I mean, part of this image was cut off, but I think this was like a 18, 19, 20 point range, you know, 1 minute candle to the downside, like nearly 20 points, maybe it was more in the ES, right? In a single minute to the downside. And this thing was just falling apart. But of course, you know, 2-3 minutes after, we get a 28 point rip to the upside. So, I mean, this can be a crazy day to try and get involved in a decline. If you're not already in this before it starts falling apart like this, then you can get totally ripped up, right? You can get totally ripped up. So, so that's why we want to figure out how we can, you know, find those spots which are safer and, most importantly, defensible. And what I mean by defensible is we know where we're wrong, right? So that we can get out where we're wrong, and that it's not too far away from where we are trading now relative to what the potential would be, right? So with sort of knowing, these sorts of behaviors about bear markets, right? There are a few things that we can put just in a simple bear market survival game plan, right? And look, this is oversimplified, but it's still stuff that you can take away from the short time that we have together tonight, to, if we start to see those signs of a reversal that we were talking about before, some things that you can do. And I see, folks, that you've got a lot of questions. I will save some time to try and get through them once we get through this. I do just want to make sure that we get everything. So, I mean, my basics, right, of a bear market survival game plan are, you know, first off, switch what we're trading. That is, if you're trading individual stocks, maybe focus more on either very liquid ETFs, right? Index ETFs, futures, whatever the case may be, right? I mean, the main reason is that when we get action like this that we were looking at back here, right? I mean, not only do these things move really fast. But when everything's moving that fast, the spreads, right, the spreads on individual stocks just can get crazy wide, and it can be hard to get out of stuff even if you can get in. So so we're going to want to switch to those things that are liquid that we can get in and out of. And as we said, we're going to want to focus on our spots, right? We talked about the trend trading model, but we're going to want to look for corrections, and Elliott Wave helps us identify which moves are corrective, right? And when things are totally falling apart, once our Elliott Wave models tell us that the moves look plausibly complete, we're going to start wanting to ramp down stops and or take partial profits or full profits, right? And of course, use some rules to know where the pattern that we're using to formulate a trade is invalid, so we can know where to get out before we get hurt too badly if the idea is wrong. And these are all ways that we can compensate for not knowing with certainty what's going to happen, right? And then lastly, if trading options, there are certain strategies which you're going to want to focus on in bear markets, right? Because these moves can just keep going further than anyone might think, and sometimes faster. We want to focus on using strategies with unlimited potential, right? If this is really falling apart to the downside, we don't want to be selling call credit spreads. We want to, if the thing just keeps going, keep getting additional profits. So we want strategies with unlimited profit potential, and we want strategies which are Vega positive, especially early on in the move, because we want to benefit from the increase in volatility when things start going down really fast. And then all of that, if we can find something where it's asymmetric, where there's greater benefit to the downside if we're right than there is loss if it goes up, then we like that also. And Aaron, absolutely. I mean, just buying puts, honestly, is a great way to do it. But there are some other strategies that we can talk about in some more depth. I mean, there are bear put ladders, there put ratio back spreads, we can do strips, we can do a bunch of things, each with their right spot. Yeah, and Rick's saying that 28-point move in 1 minute in ES is 1,400 a contract. It is, right? And yeah, it's good or bad depending on what side you're on, for sure. So yeah, that in a nutshell is is the playbook. And again, whether or not you want to dig into how Elliott Wave can help with some more of the details around that or not, I urge you to keep these things in mind if we start to see the signs of a reversal, right? And just sort of, again, as a reminder, if we see that thrust upward out of a triangle and then come back below that triangle consolidation, then we want to focus to bear market trading, right? And if possible, we want to use some of our tools to get more granular and find a sign of reversal much earlier than that, right? But again, that's beyond what we have time for tonight. But what I do recommend, if you want to drill into this more, in terms of developing the tools you need to be ready beforehand, first of all, develop an understanding of the core Elliott Wave patterns. And I think I have a way of thinking about Elliott Wave, which if you spend some time learning, even if you've had experience with Elliott Wave before, you'll find refreshing. That's what I always hear from folks who start to listen to my work after they've maybe gotten disenchanted with other Elliott wave analysis. They said, "Wow, I mean, some folks say, hey, it makes sense to me. It didn't before. Some folks say, gosh, I didn't like it, but I do now." Whatever the case may be, I think it's important to have a reasonable understanding of what Elliott wave can tell you and what it can't. And I think too many people come in thinking that it's going to tell you everything, and they just seem to have this this view that waves have some magical control over the market, and anytime their expectations don't come to pass, it's merely because they weren't good enough students of the waves, and not the real reality of things is that we can't know what markets are going to do. We can do some things to try and put probabilities on our side, but we can't know. And so and I think any thought about how or why Elliott wave is useful that doesn't say, hey, look, anything can happen is not a productive way to use it. Look, if you're really committed to the project here, right, start to learn how to do your own analysis. I think you will find it rewarding and hopefully very useful to your trading. Also, build a checklist of technical warning signs in addition to just the Elliott wave stuff, right? What typically happens near or at tops? As I've said, I don't see any of the signs I'm looking for yet. And then, of course, be prepared with a set of bear market trading rules. And we had a starter list on the previous slide that you can use to start to build your own rules, right? Shifting to what symbols you're going to trade, and looking to buy corrective bounces into resistance and all those sorts of things. And then coming up on Saturday, for folks who do want to start to do some of this stuff, we're going to do more of a deep dive into this, just digging into detail a lot of the stuff that that we just didn't have the time to address in the way I wanted to today. And so as part of that Saturday deep dive, right? Anyone who signs up for it, you're going to get my Elliott wave intro session. That's a 4-hour recording that I did just a year or two ago, and that's got in it, right, all of those, both how I think about Elliott wave as sort of a language of the market, right, as a way that the market tells us information about the trend. That's the analogy I like to use, and I find it very useful, both for understanding Elliott wave and also using it in a sane, non-dogmatic way. And then an introduction to all of the patterns so that you can follow along. And then what we'll also talk about, right, are the main technical conditions that I want to watch for as warnings for possible tops. I mean, the patterns and the wave patterns are always going to be the primary lens that I use, but I want to see these warnings, right? We're going to talk through how to identify the high probability selling zones, which you can use in combination with somebody else's analysis, even if you don't want to learn to do the analysis on your own. And then in those zones, right, either to just sell against a stop with measured risk reward, or if you want to just say, hey, this is the zone where I'm going to use these setups and these technical tools I already use. but we got to know where those zones are, and we're going to walk through that, as well as, you know, digging into detail, you know, my favorite option strategies for bear markets, talking through how to manage risk, and you know, and then, you know, that 1 minute chart that we looked at before, as well as that, you know, that day that we looked at is the daily chart, the 113 point down day. That was February 5th, right? The question is, what was I talking about with 2.5? That was that day when we had those gigantic, well, first of all, that gigantic daily candle, and it's also the day when we had pretty massively large 1 minute candles as well. And so there are a bunch of conditions that I look for when they all come together, where I'll say, you know what, most of the time I'm a trend trader, but today I'll be a momentum trader, and I will just sit there on a very short-term chart and just sell breakdowns and sell breakdowns and sell breakdowns. And it doesn't happen often, but when all of the things come together just perfectly, then then those are great days. And so so in any case, that is that's what we're going to drill into on Saturday. And so if you're interested, right, and go to simplertrading.com/wave, and everything is there, right? And you know, and I hope to see a bunch of you there. If I don't, hopefully, just in the stuff we covered today, just as a short sort of thing to keep in the back of your head, should we see some of those conditions that we talked about come together, then I hope in some small way that you're better prepared should we start to see this bear market come together as we talked about. But even if not, when it does come together, being prepared to again remember that this, you know, bear markets, things are different, right? And if you've been around and trading them before, you know that, and we all remember it. But then when we're in it, right, it's been so long since we were in one. It's easy to say, yeah, I know what it's like, and still trade like we're not in a bear market. So we've got to be prepared. And yeah, so that's what we're looking at. Like I said, I do hope you join us. And I know there were a bunch of questions I missed, so we'll try and hit a bunch of those now, for ones that I missed. I'm happy to take a look at them. Christos, for the stuff Christos is asking, am I considering any fundamentals looking at this? No, I'm really not, right? Fundamentals, I found that fundamentals don't help me at all. It's that was part of how I just had to realize that to before I could get good at trading. You know, I came to trading, I thought I would be fantastic at it, because I thought I had all of the preparation, right? I mean, I had you know, I had invested for years, and was pretty good at it. You know, I had my MBA, I graduated top in my class, when you know, when I did that. You know, I thought I know what's going on, right? And even for the pieces that weren't fundamentals, right? I mean, you see all these ads for, you know, you see an ad for this trading platform or that trading platform on the news channel, and you know, they've got 27 monitors filled with charts and graphs, and I said, you know, charts and graphs, that's where I've lived my whole life, I should be great at this. And you know what? I wasn't. I wasn't until I started working with Elliott Wave stuff. Tony, yes, I am the author of Voodoo Lines. That is me. So, John, no, I don't use Gartley so much. I really do focus primarily on Elliott Wave. I mean, I do watch some other stuff. Um, um, so I do look at other, other technical stuff, and I do, but yeah, I don't use Gartley. Yeah, so Patricia, the question was about voodoo lines, which is just a technical indicator that highlights important areas of support and resistance. So those are these horizontal lines on this chart here. So Randy is asking, do I do classical or modified Elliott wave techniques? No, Randy, I am pretty much, you know, I am pretty strict in a lot of my interpretation. So I know there have been, I mean, a bunch of people have proposed some changes to Elliott wave along the way. And oh, there's this one more pattern. And if you know this one pattern, then it works perfectly all the time, or this or that. Yeah, it's not true. At least not in my in my experience. Tony, we may see a few things with voodoo lines in there, but probably not a whole lot. Dr. Bruce, yeah, there are. I mean, there is actually an oscillator called an Elliott wave oscillator. It's just a difference between a 35 and a 5-period moving average, and that can be useful for identifying wave 5 or wave 4, and confirming that a wave 5 is running out of gas. And we'll talk about that a little bit. There's a lot more about that, not in that intro class, but if you're really interested in digging into that some more, there's a lot. There's, if you count yourself in that group that really wants to dig into how to do this on your own, I'd point you towards Masterclass, which I think you can find on the website. But yeah, absolutely, that's a great tool for finding fourth waves. Yeah, so and Trading Gent is asking if I just use the SPY or ES for plotting. I use the cash S&P 500. I mean, the SPY will be pretty close, but I find the best results with just the cash S&P 500. And even if my primary trading vehicle is the futures, which it generally is, I'm going to look to do my charting on the cash S&P 500. Yeah, so Patricia, the resource, Patricia's asking, would I recommend any book to start learning Elliott wave? And where I would point you is to the introductory class that I've done, and I only say that because, look, if I could point to another introductory reference that I thought again had that sort of sane, rational look at Elliott wave that I was talking about, then I wouldn't have spent any time, building my own, and that is that is the intro that comes with the class we're doing on Saturday. So I think that intro class might be a little less money in the store, but if you're a gold member, you're not gonna pay much more to get all of Saturday plus that intro. Yeah, I mean, I think Steph is here and Oh gosh, it sounds like my gosh, my voice went out. It sounds like, when did you guys lose me? I wish I knew, because now I don't know which questions to go back over. Sorry about that, folks. But yeah, Dr. Bruce is asking about that. The masterclass. Yes, I did. That is a class I taught. So that is a follow-on to the intro class, which is included. Which is included with Saturday. And yeah, so Lorna's asking why I chart the cash S&P when I trade the futures. So a couple of reasons. One, well, there are probably far too many reasons for me to go through all of them tonight, but in general, whenever there's an underlying spot product for a futures product, I prefer to chart the spot even if I'm trading the futures. And let's probably leave it at that for tonight, but we can dig into that more at some point. Let's see what else. So Dan's telling me where I cut out. Yeah, I was just asking Steph if she could confirm. Steph, can you confirm whether or not that the intro class will be available just as soon as they sign up, or can someone, or is that um, so yeah, so Randy, I mean, certainly there are guidelines for that, and we can walk through them. That isn't a big part of Saturday. That is that is certainly stuff that's in that masterclass if you want to dig into that on your own. So I think that we've gotten a bunch of the questions. I know there are a few more, but I see we've gotten a lot of them. So folks, I really do I do appreciate you spending some time with me. I hope you took something away from it, whether or not you joined on Saturday. And I do really hope to see you all Saturday. No, Dr. Bruce, the masterclass isn't right. And so just before I go, the idea there before Saturday is that and a lot of what we want to handle on Saturday is just sort of saying, hey, look, even if you're not going to learn all of Elliott Wave, here's some stuff just by following someone else's Elliott Wave analysis, how you can use Elliott Wave to prepare yourself and then act in a bear market. And so I wanted to get that intro class out to you. That's going to give you enough to follow somebody else and think about Elliott Wave in a rational way, and give you enough information to follow along with some of the ideas that we're going to talk about Saturday. And absolutely, if you want to go on and learn more, practice more, there are some ideas at the end of that intro class of how you can continue to build your own skills even without that masterclass, or you can use that masterclass as well. So if you want to go on to that additional level. So just a little more info on that for you there. So again, everybody, thank you so much for spending some time with me here today. I really appreciated it. I hope you found it valuable as well, and hope that I see some of you on Saturday. So talk soon.